wealth management, you try to have opportunities to allocate your funds across asset class. You try to manage risks. You also try to apply the knowledge of your own self or that of the professionals. Now, when we do this, we many times take averaging or seeking opinion from various. During the election season, when an election is over, people go out and seek opinion before the formal counting process commences, that whether a particular party or a particular combination is coming back to power. These are called opinion polls. Opinion polls become so one-sided and become so unpredictable or unreliable. People started doing poll of polls. There are 6 agencies which are doing polls. You take the average of them and say that this is what the poll of polls is. In the history, we know that there were king of kings, emperor who is ruling over various suzerains and taking wisdom from them for their local thing, giving some independence to them. Now this has come to the investment world with a phenomenon called fund of funds. What is a fund of funds? A fund of funds is a structure in which the manager of the fund of funds, he invests in a series of underlying funds. Now these funds could be one that it is an emerging market fund, it could be a Nasdaq fund, or it could be a BSE index fund, or it could be a Chinese opportunity fund, or it could be a hedge fund of funds. You invest in one particular instrument or one particular structure, and this is distributed across funds. As I told initially, when you are doing investment, one of the primary functions of doing investment is distribution of the risk. You are getting into a mutual fund or a thematic mutual fund where the fund manager takes your money and invests it across many funds, then you have done one level of risk management. But as mutual funds became very big and it became uncertain as to how this particular fund manager or change of fund managers in that particular fund would behave your investment, something like fund of funds scheme, where money is taken and it is invested in a series of risks. Your risk is distributed across geographies, across fund managers, and across fund houses. The second important thing, fund of funds ensures that a small investor can participate in a big deal. For example, a hedge fund of funds. A hedge fund requires minimum of millions of dollars as ticket size to invest in them. Now, whether the small investors cannot invest in them, it is possible only when it is a fund of funds. Not only in one, but in many hedge funds, a particular fund of fund manager can invest. See, other important factor is periodical rebalancing. Take out from one particular area and invest in another area where opportunities are emerging. In case of a fund of fund, it is easy. Because if one particular fund is not doing well, the manager exits from that fund and starts investing in another fund or in another area. So rebalancing, ticket size, distribution are the major 3 advantages of a fund of fund. As I told you, like any mutual fund of fund could have a theme, but the main difference between a normal plain vanilla mutual fund and a fund of fund is that underlying there should be a distribution across funds. Are there any downsides? There are many downsides. First one, it is like a lazy and passive kind of an investment objective. Always suboptimal, and it will remain like an average or a good optimal allocation, but it cannot give you those spectacular returns where you will be doing active investing and active watching of the market. Second one, it is cost accretive, that is you are paying layers of cost. The underlying funds are also managed by fund managers, and it is only very rarely that your manager of the fund of funds will absorb those costs and will give you one cost. So the net distribution out of an underlying will be after taking management costs get added. Your return will be net of many layers of fund management cost. Third important disadvantage, it is quite simplistic. You choose a set of funds, many times probably you can achieve yourself by allocating a portfolio to various funds and being yourself a manager of funds. Although redistribution will again require some level of activity, but definitely expenses will not be written off, and it will not be as passive or as veggie as a fund of funds sounds. So fund of funds could be good as part of your allocation, and if your asset redistribution and your asset allocation is not exactly matching, then fund of funds like polar poles will many times camouflage or will not give you the entire truth. Any which way, you will have to get to the underlyings or get to the underlying funds to get the true picture. Multi-asset funds, fund of funds are all good, but it should occupy only a portion of your asset, not be the soul and whole of your asset management. It must be taken with due diligence, with application of your own knowledge. Thank you very much.